go. What a week in gold, ladies and gentlemen. The gold price has retreated for the second consecutive day on the back of elevated interest rate expectations. Spot gold fell 1.8% to 23.77 after a record high on Monday of 24.49, getting over that 2,400. That is US dollars, by the way. But Jim Rickards, our good friend, Shae and I know Jim quite well, he caused a bit of a ruckus, suggesting it could get as high as $27,000 in just 2 years. Good on you, Jim. We'll get into that in a little while. The S&P in the ASX All Ordinaries Gold is up a whopping 29.8% since the end of February, compared to the ASX 200 putting on just 2.4%. So have a think about that. But China's bullion imports slowed last month as demand in the world's biggest consumer begins to buckle in the face of record prices, down 30% on last month, the lowest total for the year. India's gold imports in 24 could fall by nearly a fifth from the previous year as record high prices spur retail consumers to exchange old jewelry for new items. And Coinbase, the crypto derivatives exchange, has widened its offering oil and gold futures. Pretty interesting. Gold price right now is $23.80 US dollars or 3,595 Aussie. Silver, never forget the silver price, $30 US or 46.5 Aussie. It's Thursday, May 23rd, 2024. I'm Kerry Stevenson, that gold lady, founder of the Australian Gold Conference, 88 days and counting, and welcome to this week's Gold Roundtable. Joining me today, I have Chris Byrne, Managing Director of Legacy Minerals. ASX code is LGM. They've had a bloody good week, up 44% in the past month. We'll get into why in a short moment. Also joining me today is Shae Russell, Executive Producer, mining.com.au. What she doesn't know about gold stocks isn't worth knowing. And our good friend, Richard Morrow from Lowell Resources Funds Management. Welcome to all of you. Chris, let's go around the table. Let's start with you. You've had a very good week. Gold price improving. You've got a lot of projects up there in the Cobar Basin. What's your view? What's happening out there in gold land?
Yeah, I think what we're really sort of seeing is, this shift out of, it's really been a 2-year hibernation period is the way that we've sort of looked at the market for junior gold, copper, and silver explorers to, I guess a few penny dropping moments where people have realized just how undervalued. And, we've seen that correction, I think, with a lot of the major miners out there, had some big gains on the boards, with companies like Evolution, Newmont, but that hasn't, or it's started to happen in the junior space. And so we're just at the start of that. And I think it's really been kicked off, particularly for the, we're based on East Coast of Australia and New South Wales. And a big discovery was made by a company called Australian Gold and Copper, who, surged from 7 cents to 40 something in 3 weeks. And I think that's really, excited the market in terms of realizing that these, there's some great discovery stories out there. We think Legacy's one of them, but that they're undervalued, and I think that investors are starting to shift out of the lithium space and into the gold, copper, and looking for that silver exposure as well. So there's a lot of the silver companies really seeing a lot of great attention at the moment.
Yeah, thanks for mentioning silver, because I think that people often talk about gold, but they forget silver, and there is a big supply-demand gap with silver at the moment. I think people should start taking a look at it. I said right at the start, the silver price in Aussie dollars is 46. It was not very long ago that I was talking about the Aussie dollar silver price was in the late 20s. So it's had a bit of a surge. But you're pretty much gold and copper out there, aren't you, Chris?
Yeah, we are. But often when you're looking for these types of systems, you do get, a significant sort of silver component. So when you look at, in particular, we're exploring on a project called Drake, and that's been historically, focused on as a silver and our gold mine, and if you were to put that in a silver resource, for that sort of Caldera system up there, it's about 52 million ounces silver equivalent. So even though we're focused on gold and copper, and that's really our sort of bread and butter, these types of epithermals and porphyry systems, there's certainly a lot of silver value in the portfolio that's probably not appreciated in the broader market just because of our headline sort of gold copper tag.
Well, ladies and gentlemen, they are starting to sit up and take notice. Legacy Minerals up 44% on the month. Thanks, Chris. Shae Russell, what you don't know about stocks and analysis, you're with mining.com.au these days, a wonderful company. Shae, what are you seeing in the market in terms of, I guess, a little bit more interest in gold and silver? But it's that trickle down effect, isn't it? The producers and then the developers and down to the explorers. But what are you seeing out there, Shae?
Listen, what a G up, Kerry. Thanks very much for that one. Listen, I think I've done a few interviews maybe for the past 2 months, and started almost every interview the same. What a time to be in gold. It's been a rough time for gold explorers, or basically any company that didn't have lithium for the past 2 years. And I think finally we're starting to see some editorial excitement around gold companies. Now, as you said, it starts with the big guys and then it starts to trickle down. However, what I'm not seeing is sentiment start to turn towards the explorers. And I'd really like to see that, because it's a buyer's market out there. There are some fantastic explorers going for next to nothing. And, you just need to ask their directors about how undervalued they are. But I'm yet to see shareholders want to jump into these explorers. I think they're looking for a more sure story when it comes to moving into these gold companies. But that's the risk reward trade off that you get with gold explorers. You're looking for a company, you want to be part of the story with the next big thing. So my view is we're seeing institutional or smart money, family wealth money move into the gold explorer side. And the retail side of things, I think, will follow, but that could take another 6 months. So for eagle-eyed investors, I think the buying opportunity for gold stocks is now.
I'm going to come back to you in a minute, Shae, because one of the things that I think our audience out there wants to know is there's a lot of companies out there. What are the things that they should be focused on? I'll come back to you in a minute on that, because I think a lot of people out there, they're either too scared, they're not quite sure what should they look at. Maybe they've lost a little bit of money in the past and they go, too scary to get back in. But have a think about that. I'll come back to you. Richard Morrow, Lowell Resources Fund. You're down there in Melbourne. Sentiment changing, Richard? Are we moving away, moving back into precious metals? What are you seeing out there?
Look, thanks for having me on, Kerry. And we're starting to see the first stirrings of interest in flowing back into the gold sector. Of course, it starts at the big end of town with the mighty Newmont and Northern Star and the bigger stocks, and then it trickles down. And this is just the first stirrings. I mean, if you look at the fundamentals behind the gold price, we see these rising amounts of US debt, concerns about the fragile nature of the whole global monetary system, and all those classic reasons why one should have exposure to gold as a wealth protection mechanism. They're all just sitting out there and screaming at us, and they probably have been for the last 9 months. So it just takes a while for the energy to build up. People start to move. You get some good discovery news, and that draws people into that smaller end. And certainly Chris is in that category there as well, that come up with a good exploration story, and suddenly, wow, things are starting to happen, and you can attract investor attention. Whereas Chris could walk nude down Collins Street with a good drilling result over the last year and wouldn't have batted an eyelid. So we're back. Yeah, we're back, and this is. I mean, I've seen 4 or 5 of these types of cycles now, and just classic signs there that this is the very early stage, as the boys would say. We're really only in not even in the foothills yet of this run in the gold investment sector.
What do you think has changed? Is it what do you think is changing sentiment, Richard? Price?
Yeah. There's so many things been all mounting up and to come in behind gold, and actually the interesting thing to me is why gold is performing now when all these fundamentals have been there for such a long time, and but a lot of the attention has gone into the crypto space as the alternative wealth protection sector of the market. And I think it's all to do with, you know, the US elections coming up as well. The Fed, they're dithering over, you know, told us last November, they said we're going to cut rates. Well, hang on, we're still waiting, you know. And meanwhile, people are positioning themselves. Why haven't they done it? Why haven't they done it? They said they're going to do it. And, you know, you look at the numbers, inflation is still a little bit too high. We're seeing the growth in America. Last night, the Fed tracker is going on at 3.9%. That's a boom in America. How can the Fed possibly even think about cutting rates when the US economy is growing at 3.9%? And so you bring all that together, and people, and there's some, you know, grey hairs, and I've got a few myself who remember back to the late 1970s. The central banks around the world are all desperate to cut rates. We all know that. But they all cut too early, and it just triggered a God almighty lift in global inflation. And that, I think, is the key thing that's driving people back into gold, that we're about to make a late 1970s mistake again. Remember history, got to learn from history. They're making that same mistake again, and that will power gold. What gold went up there from about $200 up to 900.
Yeah, 880.
Yeah.
Yep. Really, really good summary there, Richard. And I think you're right. And I love that word, dithering. But just before we go on, I just want to remind people that the Australian Gold Conference will be held this year on August the 26th to the 28th at Crown Towers in Sydney. This is your chance to come and meet all these wonderful people on screen now. They'll all be there. And we've got educational, we're going to give away some gold and silver. Go to goldevents.com.au and hurry up. Get the early bird price. It's $199 only for investors. A lot of people are going to be there this year. I want to bring up something before I go to you, Shae, about some of the ways people need to look at it. Shae, you know Jim Rickards. Can he possibly be right about $27,000 gold? 27,000. Let me just put a little bit of that in context as well. He thinks gold 27,000 by 20. How can that happen? Seems absurd, but he says he's just not throwing that number out there to get attention or shock people. He says it's not a guess. It's about the result of rigorous analysis, because he arrived at that price by considering the price of gold if there was a monetary gold standard. I don't think we're going to get that, but there's no appetite, he said, for a gold monetary standard right now. They've got no interest in a form of money, and I quote Jim, they can't control. It took 60 years from 1914 to 1974 to drive gold out of the monetary system, and no central banker wants to let it back in. But what if they don't have a choice? And I quote Jim again, what if confidence in command currencies collapses due to some combination of excessive money creation, competition from Bitcoin, extreme levels of dollar debt, a new financial crisis, war, or natural disaster? In that case, central bankers may return to gold, not because they want to, but because they must do in order to restore order to the global monetary system. Well, all those comments that Jim made about excessive money creation, competition from Bitcoin, extreme levels of dollar debt, new financial crisis, war, natural disaster, it's all happening. Shae, are we going to get 27,000 gold? Crazy.
Listen, stranger things have happened. It sounds unfathomable right where we sit right now. And I know, look, you and I both know Jim quite well. This is a conversation I'm sure you and I will have with him at some point in the next couple of months. But if we go back to Richard's point, to where the enormous gold bull run that happened in the 1970s, gold rose 25 times from $35 per ounce to $880 at the end of the bull market. Nobody, I am well versed in this subject, nobody sane predicted it back then, but it still happened. Gold hitting $27,000 per ounce right now is really only a little over 10x where the gold price is. So it's not impossible. It is achievable. However, I would suggest that Jim's prediction is maybe a decade or two too soon. It's not a number that, if it is going to be hit, it's going to be reached in the next 12 months to 24 months. Because if it did, that implies an absolute imploding of society as we know it. That is not going to happen. I want to make that very, very clear. However, I do think a long-range prediction like that, 10x from today, entirely plausible by 2050, let's say. That's not that far away, unfortunately, for me.
And fortunately for me, I will be very much retired by then. I can say that with all confidence. Chris Byrne, does the gold price going up, falling back a little bit, does that impact your project in any way, shape, or form?
Yeah, I suppose that the depressed gold price, or not the depressed gold price, the depressed sentiment in that in the junior space has made it hard for companies to attract funding and explore. So we certainly have seen, a lot of majors sort of stepping into that space and getting involved. We've got a partnership with Newmont on a project, and that's a very early stage project. So we're starting to see the majors, I guess, they've realised for a while around this shortage, the rates of discoveries. It's well known about declining discovery rates. That's nothing new, but that trend is going to continue. And companies need to find replacements for assets that have been producing now. And I think that there's some pretty interesting figures around, all of the operational gold mines now will be exhausted, in the next 30 to 50 years. So, we need to replace, statistically, if you look at the life of mine of even some of the world's best assets, and you put a 30, 40-year mine life on them, they're going to be exhausted at some point, and we're not finding the replacement ounces in the ground. So we see that to be a really interesting sort of part of that market that's quite different from, I guess, the macro thematics. But yeah, we really see that sort of playing out on the ground in terms of the way where the funding's going and the aggressive exploration that's being done across the globe. That's not resulting in the same sort of rates of discovery that people are used to throughout the course of the last 100 years.
Yeah, it's interesting, and I spoke about some of the gold stocks earlier, but since February, Newmont, who you're doing, you've got a joint venture. Is it a joint venture? Would you call it a joint venture?
Yeah, it's a farm in earning to a joint venture. Yeah.
It's very clever, ladies and gentlemen. Go check out Legacy Minerals. Go to their website. As I said before, up 44% a month. But Newmont shares are up 43, nearly 44%. Ramelius up 50. Evolution 40. Bellevue nearly 40. Perseus just over 40. And as we mentioned before, Australian gold and copper up 487%, 487% in a month. Now, not financial advice, ladies and gentlemen. You've got to go do your own homework, do your own research, reach out, call Chris and ask him why his shares are up 44% in just the past month alone. But Shae, back to you. I said earlier, how do people decide out of all the stocks, and we're talking gold and silver here, there's plenty of stocks on the share market, but just let's focus on precious metals. What should they be doing when they're looking at what to, I guess, get exposure to?
So I was furiously writing a list of trying to whittle it down to what are my top easy to digest tips from here. Yeah. So first of all, sorry.
I didn't say a word. I'm not sure what. I heard that as well. It was the gremlins.
Yes, the web gremlins. Hello to my, friendly FBI agent. All right, moving on to something more serious. So look, there's a couple of things that I've discovered over the years that geology is complicated, junior exploration is complicated. So it is really hard to sift through all of the information. But there's a few things you can do to sort of whittle it down and help you choose great explorers, because there are so many great explorers led by fantastic teams. So I don't want to deter people from doing this. First of all, I always suggest looking for a company, a polymetallic company looking for polymetallic deposit. That didn't come out very well.
No, but also, and I want to just say to you, for some people that are not into mining at all, what do you mean by polymetallic?
More than one metal. So you want to look for a gold silver company, gold copper company, like Legacy's doing, great things out there. And what that does is it actually helps de-risk the project for investors. It means if one metal doesn't work out, there's another story that they can pivot into that other JV partners or other high net worth investors might be interested in helping to develop. So that's a really good thing to have on your list. My second point here is don't be afraid of young teams at the top. Because and when I say young, I'm talking 40s, okay? I'm not talking 22-year-olds who got their keys to daddy's company. I'm talking young teams, and I'm specifically here referring to Legacy Minerals because these guys are quite innovative, and this isn't a G up for Legacy, by the way, but I just think they've got a great approach that will be mimicked by other leaders. as junior companies come on board. They're looking at old information with fresh eyes. And I don't think people should see that as a deterrent. I think they should take that energy and the fact that these young directors are embracing technology and its applications and what can be done. Second thing here, don't be afraid of a company that might be nearing a capital raising. That stock price could have been beaten down and you might be able to enter into the company much cheaper than previously. But most importantly, and this is the most important thing when it comes to any stock, gold or not, understand what your exit point is and what your exit strategy is. Where do you want to leave it? Are you prepared to have your money sitting in this company for 3 to 7 years? Because that is what it takes to make a discovery. And you need to be willing to ride out those highs and lows because share prices will get knocked around fiercely, as we all know, for the past couple of years. So if you're investing in these explorers, work out where they are in their discovery story. Don't be deterred by early stage. Don't be deterred by late stage either, but understand it's a 3 to 7 year transition for them to grow to the next stage if all goes well. And if once you define your level of risk and your comfort of risk, you'll be able to ride out these cycles with explorers with a lot more ease, and then you don't live and breathe by the news cycle, because I believe investors need to disconnect themselves from the news cycle and make sure they're investing in the long-term story with explorers. These rocks took millions and billions of years to form. You can't expect a company to dig up good news in 6 months.
Really good summary. And I can see Richard Morrow nodding his head there. I'm going to come to you in a second, Richard, but I do want to point out that on Monday, the 26th of August, if you go to goldevents.com.au, we've got a free educational evening, which is sponsored by Bullion Now. And what are we doing there? We're helping you understand the difference between, gold bullion versus equities versus ETFs versus digital, all the different ways that you can get exposure to gold. And as Richard said earlier, protecting your purchasing power, because that's actually one of the most important things. So that's on the Monday evening from 5 p.m, sponsored by our friends at Bullion Now. I really, really, really encourage each and every one of you that are watching this roundtable this week, please make sure you get educated. It is so important. And you will meet people like you here today. Richard, you were nodding your head fiercely there. Did you have something that you wanted to say about looking at gold stocks and silver?
Well, I just had to mirror what Shae was saying. It's 3 to 7 years. I mean, those rocks took millions of years to form, and I couldn't say it any better than what Shae said there. I mean, some of the strategies, though, if you're looking ahead, I mean, at the Lowell fund, we're listed on the ASX. Our code's LRT. We tend to focus on stranded assets, like stranded gold in the ground nearby to a mill, a gold mill that isn't being totally utilized at the moment. And in the early stages of a gold bull run, that's where I think the greatest value is being shown. And I think you're right. Do your own homework. This isn't advice. But that's something we focus on is enterprise value of a company divided by the number of ounces or potential ounces in the ground is a good way of getting a relative valuation. Now not all the industry does it that way, but it works for us. We like to know how many ounces of gold potential are we buying whenever we go into a stock.
Yeah, and I guess if you want them to do all the work, you just go and buy some Lowell Resources stock, wouldn't you, Richard?
Well, yeah.
That's get you to do all the work, and they can just. Chris, we're running out of time. What's next for Legacy Minerals going forward?
Yeah, so we're sort of right in this, discovery stage at the moment. So we just finished drilling on a project at Black Range, and that's something that sat untouched. Last drilled by Newcrest in 1992. So it's pretty exciting to be the first company on ground drilling that. We're about to move into drilling at Ballura, and then we've got another 2 projects that we're going to drill over the next couple of months. And one of those is with, you talk about top tier management teams, Mark Bennett. And S2 Resources with Mr. Creasy as a shareholder there. So we're really in that sort of exciting pre-discovery stage, and I think that's the market's certainly paying attention to the fact that should any of those come good, there's a real opportunity to replicate some of the success that we're currently seeing in the market. And as I said, a year ago, if you'd probably made the hits that we're looking at doing now, the recognition might have been there. But we're just at the right sort of stage where you've got those macro catalysts, really, I guess, putting us in a real prime position.
Fantastic. Guys, I really appreciate each and every one of you taking the time out of very, very busy schedules. As I said before, I think now is the time for gold to shine, not financial advice. So don't take what we're saying or seriously. Do what Rick Rule always says, which is do your own research and make sure you get educated. It is so important. But one of the most important things is that in just over less, I think it's 88 days from now, we'll all be meeting at Crown Towers in Sydney. And I do encourage each and every one of you to get educated. But if you don't want to come along in person, make sure you like and subscribe to this video, share it with others as we grow the Making Money Matter podcast and YouTube channel. But thank you so much for watching today. Thank you for my guests, and we'll see you all again soon. Cheers.
Thank you.
Thanks, Gary.